People Making Money, one of the Way to Wow shows. As you know, it's Wednesday at 10 a.m. Pacific time, and we're here to talk about professional matters, running a business, starting and running a business, and wealth building, all of those things that provide the resources for the other facets of our lives. And this is the fifth year of my doing this show, although the first couple of years were under a very different a very different format. But I just wanted to take a moment to thank those of you who have been with us from the beginning for your continued viewership and your support of the show. And I just spoke with a friend of mine yesterday who was very gracious in spreading the news about what we're doing here, and so Jeffrey, if you or any of your family members are watching this, or any of your associates, thank you very much for that. I deeply appreciate it. So today, if you saw any of our social media posts, you saw that I'm going to talk about a new burden on small businesses. So the title is probably a little edgier than what you're used to from me, but there comes a point when I think we have to I don't know, have some candor in what we think is going on, and the reality is, and as you'll see when I get into the topic itself, this is something that almost all large companies, in fact, I think all large companies, are exempt from. Now, you can certainly make the argument, well, they have all kinds of other regulatory things that they have to deal with, and that's certainly true. In this case, the discussions I've had with people about it lead me to think this is not going to do what they want to do. It's kind of like situations where you're trying to track down bad actors, except for they're not the ones who are going to comply. So all you're doing is getting people like you and me who do our best to comply with laws and regulations, putting a burden on us, and anyway, so that's why the title is a little bit edgy. In any event, I'm going to go ahead and bring up the presentation I have for today. So here's the title, and there it goes. Okay, so like all things on the Way to Wow shows, we base them all on the 3 pillars of attainment. And today we are definitely going to be down here in the finances realm of the pursuits pillar, and you'll see why it's got that narrow focus today. So what we're talking about is the beneficial ownership information reporting regimen that is the outgrowth of the Corporate Transparency Act. So I was reading some more about this. There is a sense in the United States that we are far behind the curve in dealing with the issue of money laundering and criminal activity, bad actors coming into the United States, having access to our financial markets, having access to our capital markets. And in fact, there's another new regulation being proposed by FinCEN. FinCEN is the Financial Criminal Enforcement Network, which is an agency of the federal government that has the remit of dealing with things like criminals investing their money in legitimate businesses in the United States and then using those profits to further additional criminal activity. Same thing with terrorists and terrorist groups, money laundering. All of that is the concern of FinCEN. So it was passed, and I'm going to go through this legislative history a little bit, so you can kind of understand how this came to be. and that is that uh, it was made part of the National Defense Authorization Act. So you might ask, well, why was a regulation designed to prevent money laundering and criminals and terrorists taking advantage of American financial markets in the National Defense Authorization Act? And generally, that's you have that kind of thing because the National Defense Authorization Act, the NDAA, is what funds the military. And so it's generally considered a must-pass piece of legislation each year. And so oftentimes other things that are only distantly or sometimes not really at all related to the NDAA get attached to it as riders, additions to the primary legislation, in order to essentially get the number of votes that are necessary in order for it to pass. Because people who might not vote for it on a standalone basis, they don't want to be, when I say people, senators and congressmen who might not vote for a particular issue on a standalone basis, will vote for it as a rider to the NDAA because they don't want to be on the record as having opposed the NDAA, and looking like they're against sustaining the American military. So what happened was the act was, the NDAA for fiscal year 21-22 was passed, I believe, sometime in November, December. It included this rider, the Corporate Transparency Act. President Trump vetoed the legislation because of that, and then the 2/3 of the Senate and House of Representatives voted to override President Trump's veto, and so it made the NDAA and with the CTA rider law, despite the fact that it wasn't signed by President Trump. So the result is we have this new reporting requirement, and as you'll see in a few minutes, it applies to basically small businesses. So when we talk about beneficial ownership information, we're talking about identifying individuals who directly or indirectly own or control a company. Okay, and we'll talk about what that means, but basically it means they have a 25% or larger stake in a company. Okay, and so therefore, at least in the eyes of the CTA, have the ability to decide what the company is going to do. All right, so let's move to the next one. All right, so I think one of the important aspects to look at is we're providing all of this information about who owns companies in which we're involved, who has access to that information. So federal, state, local, and tribal officials have access to it. In other words, pretty much any government official can get access to the FinCEN database where this information is kept. Presumably they have a purpose for accessing it, i.e., they're doing a criminal investigation, or they're working on some sort of matter, and it appears that there's some kind of money laundering activity going on, whatever it is. But I didn't find any real restrictions on that. So that's pretty broad access, I would say. Next, certain foreign officials who submit a request through a U.S. federal government agency. Okay. Now, in the case of foreign officials, it's for authorized activities related to national security, intelligence, and law enforcement. So one would assume that same limited number of reasons would also apply to domestic government officials. Okay. Nonetheless, as unfortunately we've seen over the last number of years, related to national security, intelligence, and law enforcement have gotten somewhat elastic. So I'm not sure that we should rely on um, these limits when it comes to access of the data. And then foreign institutions, in certain circumstances, with the consent of the reporting company. So let's say UBS, which is a Swiss-owned bank, wants information on a particular company in which you have an interest. So they can request access under certain circumstances, but supposedly in that case, FinCEN is going to need to have your consent before they release the information. And then finally, those financial institutions, the regulators of these various financial institutions, when they supervise those institutions. So if UBS, for example, were to grant them information or access to the FinCEN database with this information, so the bank supervisors in Switzerland would also have access to that information because they're regulating UBS, and so as part of their audit functions, et cetera, they would have access to that information. Now, it's interesting to note, by the way, and again, I read through the regulations, and I might have missed this, but I don't think so. As far as I could tell, there are no countries, governments that are categorically excluded from getting information. So, for example, some of our biggest geopolitical rivals, China, Iran, Russia, North Korea, they are not categorically excluded from submitting a request for information, which we might find a little bit surprising, but I think it's something to keep in mind. And I mean, we all know how these things work. We've seen problems with the IRS. Where a contractor released information without authorization on a large swath of wealthy Americans, and on other groups in years previous to that. So, I think that while this appears to restrict access to our information, I think we have to be prepared to understand that with the creation of this database, our information about our business interests that go into this database are probably largely going to be public knowledge. So nothing we can do about that. As you'll see again as we get farther into this, the penalties especially for willful noncompliance are very, very high. So at least as things stand now, it appears we have to comply. Now, before I go any farther, this only went into effect January 1st of this year, and so people are pretty new to this. Your lawyer, your accountant, it may not really be on their radar. If you have any questions about whether you should report, and if so, what you should report, although I'm going to go through the standards here. This isn't to say that therefore you should just go ahead and do this. You may very well want to consult with your lawyer and your accountant before you deal with the BOIR, and just make sure that it is something that you want to do. So I'm going through what the issues are, how to comply if you choose to comply, but whether or not you comply is of course your choice. And that's something to take up with your advisors. Okay, so here we go. Now, first of all, let's look at which companies must report. Okay, so first of all, domestic corporations. Domestic corporations, by the way, when we use that term domestic in here, we mean they were organized in the United States. Although corporations in this country are organized under state law. So they were organized in one of the 50 United States, as well as, I believe, territories like Puerto Rico, Guam, and the District of Columbia. So those are all domestic corporations. Limited liability companies, again, domestic limited liability companies, LLCs, and any other entities created by the filing of a document with a Secretary of State or similar office in the United States. All right, so if you recall from I think a week or two ago, last week maybe, I went through how to create your business entity, and we worked an example on the Secretary of State for California's website. That is typically where you file the documents in order to create a corporation or an LLC. That certainly is the case in all the states that I've dealt with, although I have not dealt with all 50 states. But in any event, because corporations and limited liability companies are sort of creatures of the law, right? We talk about a corporation as being a legal person because it has an identity separate from its officers and directors and shareholders. All right, so it's created by doing these filings. Now, a sole proprietorship is really just you acting in a business capacity. So you don't have to file any kind of document with the Secretary of State, at least in all the jurisdictions I've dealt in. And so in that case, it would appear that sole proprietorships are not required to meet this reporting mandate. Okay, so if you have any questions about whether your business entity is required to file, this is one of the things to take up with your advisors before you do anything about the BOIR. Now, as well, foreign companies formed under the laws of a foreign country that have registered to do business in the United States by filing a document with the Secretary of State or a similar office. Okay, so let's say a corporation was formed in France, okay, but it does business here in the United States, and so it's registered to do business here in California. It does that through the California Secretary of State, and so now it's required to comply with the BOIR. Okay. Now, if a corporation is formed in California, but it's going to have offices in Florida, for example, Florida may require that California corporation to register in Florida as a foreign corporation. Okay, so the reason we use domestic and foreign in that context is because it's not domestic to that state. So although it's a domestic corporation from the perspective of the United States overall, a California corporation needing to register in Florida is looked at by Florida as a foreign corporation. But that doesn't make it a foreign company, and that's why I wanted to distinguish this. So a foreign company, generally speaking, means a company formed outside of the United States and her territories. Okay? All right, so these are the two main categories. So next. Okay, so which companies are exempt? Okay, so first of all, there are 23 categories of companies that are exempt from reporting. I'm not going to go through all of them. And at the end, I'm going to give you some links, and I'm also going to put links in the show notes where you can find all this information. But if you go through this, you'll see almost well, first of all, government authorities are exempt, of course. Almost all of these exempt organizations are financial services companies and financial services oriented companies. So I'll give you just a couple: investment company or investment advisor, venture capital fund advisor, securities reporting issuer, bank, credit union. Okay, these are already heavily regulated industries. They have, for the most part, they already have, I should say, for the most part, FinCEN reporting requirements. So the idea behind these is, since they already have to report to FinCEN, there's no reason for them to have to report, in essence, a second time. Okay, so that certainly makes sense. Okay, so 1 through 18, that's basically the government and financial oriented businesses. Okay, so exemption 19 is a tax exempt entity. So this is an interesting exemption because it essentially means a nonprofit, okay, or a not-for-profit. A friend of mine makes a distinction between those two, but in any event, it is interesting because there are a lot of large organizations that operate on a tax exempt status. And I don't know, it seems to me that they would be, ripe for money laundering. Not necessarily for investment, because they're not going to, the investors are not going to get a return on their investment, but in terms of sort of moving money through and making the money look clean. Okay. Tax exempt entities, I think, would do that. So I don't know. I find this a little bit surprising. So an entity assisting a tax exempt entity is also exempt. I'm not exactly sure what that is. That would seem to be, like a for-profit company, but in any event, this is one of those categories where, if you think you qualify under this number 20 exemption, this is something to take up with your advisors. Okay, next, large operating companies, and then 22 subsidiaries of certain exempt companies. I'm going to talk about that in more detail next. Okay, and then finally 23, an inactive entity. So I suppose that makes sense. If a company is not doing anything, so then there's no reason for it to report. All right, so let's go to part 2 of which companies are exempt. Okay, the large operating company exemption. So to qualify as a large operating company, it directly employs more than 20 full-time employees in the United States. Okay, so if you were employing only 19, presumably you are not exempt. Okay, or if you're employing, 18 in the US and, 3 in Mexico, you would not be exempt because you have to have more than 20. That, in other words, presumably 21, right? 20 and a half employees. I'm not sure how that works. You have, I don't know, very, very short employee. I don't know. But anyway, you directly employ more than 20 full-time employees in the United States. Okay. By the way, you notice that this incentivizes companies to employ people part-time to stay under this exemption. Whatever. Okay, next, has an operating presence at a physical office in the United States. In other words, they have a bricks and mortars presence here in the United States somewhere. Now, I don't know about this, and again, this is all new. But if you operate from your home, okay, does that mean that you don't have a physical office in the US, right? How is that going to be interpreted? I don't know. This is something to take up with your advisors, okay? Filed a federal income tax or information return in the United States for the previous year, demonstrating more than $5 million of gross receipts, okay? So you can see that This is really targeting businesses with $5 million and less of gross receipts and sales. That's why I call this a burden on small businesses, because 5 million and less that's really a small business in the United States. You may say, wow, I would love to make $5 million in my business. I get it. I get it. But the reality is, when you think about it, that's not a tremendous amount of revenue. Okay. So the greater than $5 million threshold applies on a consolidated basis. So if the company has operating subsidiaries, wholly owned subsidiaries or divisions or whatever, and maybe it has, there's the operating company, and then there's 3 subsidiaries. It's the consolidated gross receipts or sales that are relevant, not just the gross receipts or sales for the operating for the parent company. Okay, so an operating subsidy may only pay over to the parent company a portion of its net revenue, for example. Okay, and that could make it look like the gross receipts of the operating company are much lower. Okay, so for the purposes of BOIR, excuse me, the gross receipts of all the subsidiaries need to be added to the gross receipts of the parent company to see whether they exceed the $5 million threshold. Okay, now you you don't need to consolidate headcount in order, you can't consolidate headcount in order to be exempt. Okay, so why you can consolidate dollars but not headcount, wasn't able to find that out. Okay, now subsidiary exemption: any entity whose ownership interests are controlled or wholly owned directly or indirectly by specified exempt entities, including large operating companies. Okay, so if there's a large operating company that is exempt, that has subsidiaries, so then the subsidiaries of that company are exempt as well. This is another area where you may be involved in a subsidiary company. You may even have ownership in it. Okay, but because there's a parent company to which you report, if you may not have to comply with the BOIR, because you're the large company of which you're a subsidiary may be exempt, and therefore you're exempt. Again, this is something I'm going to repeat this probably 100 times in this presentation. This is something that you need to check out with your lawyer, with your accountant, before just going ahead and complying. Okay, next. Okay, so if you want more about reporting companies, you can here's, I'm going to put this this URL in the show notes. You can go to that. Okay, and you can see additional information there. Okay, and then let's go to the next one. Okay, oh wait, I'm going to go back here. I'm just going to share my screen real quickly. Okay, so you should see now beneficial ownership information reporting. Okay, and there's a whole list of subjects on which you can look up. You can get frequently asked questions, FAQs. So here's reporting companies. Here's the whole section on them. Okay, so for example, are certain corporate entities such as statutory trusts, business trusts, or foundations reporting companies, right? So you click on that. State laws vary on such trusts about whether they're required. So, again, look into all of this before you just assume that you have to comply. Okay. All right. So I just wanted to show you that database or that list of questions because I would look through that before you determine, certainly on your own, whether to comply. But if you have any kind of um, uh, slightly unusual ownership structure, so then it's you definitely need to look into this more deeply, and that's one place to start getting some information. Okay, so what is the deadline to report? So if you are a reporting company or you have a reporting company and it existed before January 1st of this year, 2024, then you have until January 1st of next year, 2025, to report, i.e., you have a year. Okay, now part of that year is over. So you got about 11 and a half months left. I'm sorry, 10 and a half months left. Okay, so you do have time to comply. And I think that's reasonable because you've seen a number of questions have come up already that you may need to investigate, and so it can take time. And by the way, you might call your lawyer today and say, hey, I saw this presentation on this BOIR. Do I have to comply with this? Don't be surprised if your lawyer says, I don't know what you're talking about. Okay, I've seen one small article about this in the Wall Street Journal. It was just last week, I believe. And so I'm not sure that I've talked to several people. They haven't heard about it. Okay, nobody I've talked to has heard about it. This is definitely something that it's very reasonable that your advisors would come back at you and say, I need to look into this. I can't answer your questions off the top of my head. Okay. Now, if the company was created or registered on or after January 1st of this year and before January 1st of next year, then you have 90 days after receiving actual or public notice of its creation or registration is effective. Okay, you have 90 days to report. So, again, that's kind of interesting because all of this is new. And so, the reality is, I think people advising businesses need to get up to speed on this very quickly. Because if you form an entity this year, you only have 90 days to comply if in fact you're a reporting company. So making that determination, the timeline is shorter than if your company was formed basically last year. Now, you can see going forward, if your company is created or registered on or after January 1st of next year, 2025, you only have 30 days to register if you are indeed a reporting company. So I think the idea is that by next year, this should all be figured out. And so, you should be able to comply quickly. So, this isn't something to just ignore and hope it will go away. I don't think it will. And so get on top of this. If you have a corporation or an LLC, you need to look into this. Now, if you have some other type of entity, your limited partnership, your general partnership, it's not at all clear that you have to register, but I would certainly look into it and make sure that you are that you indeed don't have to report. So just got a little message here. Somebody message back. Okay, so those are the deadlines to report. All right. So in terms of actually doing the reporting, it's done online. I'm going to go ahead and share my screen again, so that and I'm going to go through how you actually file. So here's the web page that you go to in order to actually do the reporting. So I've done this for a couple of entities already, in which I'm involved, and it's not complicated. It does take some time, and you have to have certain documents to do it. Okay, so I don't know that you necessarily need to pay someone to do this, although I imagine there's gonna, people are gonna offer to do this for you for, whatever, $200, $500, whatever it is. You'll make a decision whether you want to pay somebody to do it. Now, the first thing you're going to see is there's a warning. You're entering a U.S. government information system, and by accessing it, you're consenting to being monitored by the U.S. government, etc. If you click cancel, you're not going to get in, so you click agree. All right, so here you see the beneficial ownership information report, the BOIR, and you see that anything with an asterisk is required. Okay, so first of all, here's they have a need help function. Here's their standard privacy and paperwork reduction act notice. Okay, that's whatever. That's fine. All right. So first of all, is this what type of filing is this? So is it an initial report? Is it the first time you filed? Is it to correct a prior report? You made a mistake, or is it to update a prior report? Now, the difference between a correction and an update is, in a correction, you made a mistake. In an update, something has changed since your prior report. So you see, we need to keep these up to date. And are you now a newly exempt entity? And so basically, one would imagine that if you're a newly exempt entity, let's say that you've become a large, I forget what the term is, but a large company. So now you're exempt, and so you can amend your filing, presumably to remove it. Okay, so let's say we're doing an initial report. Okay, the date prepared is automatically filled in. It's February 14th. Okay, let's go to next. Okay, so what you're doing in most cases is you're requesting to receive a FinCEN ID, meaning you're to be identified in the database. Now, here you can always look here and see what this is. Check this box to receive a FinCEN identifier for the reporting company. It'll be provided in the submission confirmation details, okay? And that FinCEN identifier is what confirms that, in fact, you've complied, okay? Now, if you're a foreign pooled investment vehicle, it's a different issue. Most of us are not going to be dealing with that, so we're going to request to receive a FinCEN ID if you want. Okay, you notice it's not asterisk, so you could also just leave it out. Okay, reporting company names. I'm just going to make up a name because I'm not actually going to file this. I'm just going to take you through the steps. So let's just call this sample company. Oops. Hopefully we'll spell it right, corporation, okay? Alternative name, if there's a DBA, so you put those in there, okay? If there's more than one, you can add alternative names. Okay, your tax identification number. So it's either going to be an employer identification number or a social security number, basically, unless it's some sort of foreign entity. Okay, so let's say it's an EIN, okay? And, they used to be called 95 numbers. So we'll give it 95-987654. 3, I think, is the right number of numbers. Oops. Must be exactly 9 characters. 1, 2, 3, 4, 5, 6, 7, 8, 9. Oh, okay. I got to take the dash out, I guess. There you go. Okay. Country, jurisdiction, only if it's a foreign tax ID. Okay. So you don't need to worry about that. Okay. Country, jurisdiction of formation. Okay, so we're in the United States. Notice here's all the countries of the world, but of course we're generally looking at the United States. Okay, domestic reporting company. Okay, so in what state was it formed? Okay, so we'll say, oops, not that. We'll say California. Okay, now it's 10A is asterisk in red, so you have to put that. It would appear you don't have to put the state of formation in. Don't know that it matters at this point. Okay. And what's your current address? So for now, I'm just going to put in, address, whatever your address would be, but that you see that is required. Oops. And my spelling is off again. Okay. City. I'm just going to put in here city. Okay. U.S. territory or state. So, oops. I'm sorry, country, U.S. And then if it is in the United States, so what state is it in? California, zip code 90000 for now. That's fine. Okay, let's see. Hopefully it's not going to go, this is wrong. Okay, good. So it's letting it go through. Again, I'm not going to file this, so it doesn't matter. Okay. Check if it's an existing reporting company as of January 1st, 2024. In other words, it was formed sometime prior to that. So in this case, let's say that it was. Okay. Oh, sorry. This is not an existing reporting company. Sorry about that. That means they've already reported. Okay, so company applicant information. Okay, now if you already have a FinCEN ID, you can put that in. Okay, but if you don't use, you can see it's not required. Okay, so don't worry about that. Okay, individual's name. So I'll just put in my name, Kevin Bemmel. You all know me. Okay, middle name. You don't have to put in suffix. You don't have to put in. You do have to put in birth date. I'm not going to give you my birth date, my real birth date. I'm just going to put 11. Oops. I'm sorry. 11, 2011. No, that won't work. They may not take that. So we'll say 1933. Okay, there. All right. So that's not my real birth date. So, you're not getting any personal information. Okay. Address type. So let's say you have a business address. Okay. And it's very likely, the same address that, you were before. So address, city. Oops. Okay. Country, United States, state, California, 9000, just like before. Okay, then form of identification and issuing jurisdiction. So you're going to have to upload an image of your ID. So in this case, let's say it's a state issued driver's license. Okay, and you put your identifying document number. So again, this is not my real driver's license. Okay. Okay, so there you go. Okay, identifying document issuing jurisdiction. Okay, United States. Okay, state, California. Okay, you don't have to worry about tribal. Okay, and then you'll need to put an image of it in there. So I'm just going to drag something. Let's see, what do I have that I can put in there? Do I have anything? I should have had something ready. Let's see. Okay, I'm just going to try putting a picture in there and see what happens. Okay, so there, it's I just put. I put a JPEG of a house. Basically, it's the same one that's behind me. I just want to be able to do that, so I'll be able to click through to the next stage. Okay, but you would obviously you'd put an image of, in this case, your state issued driver's license, or if you're using a passport, your state, local, tribe ID. Okay, whatever you're using. Okay, next. All right, beneficial owner information. All right, so these are the people who have at least a 25% ownership in the entity. Okay, so here's beneficial owner number one. Is it a parent guardian information of a minor child? No. Okay, in most cases that's not going to be the case. Does that person have a FinCEN ID? Even if they do, you see it's not red starts. You don't have to put it in there. Okay. Is the beneficial owner an exempt entity? Again, that's something for you to work out with your advisors. Okay. So here's you can see you have the red asterisk. So you need to fill this in. So individual's last name, Bemmel, first name, Kevin. Okay. Birth date. Let's see. I think I said 1/1/1933. Okay. All right, and then residential address. So in other words, where can you, the owner, be found, or the reporting person, be found? City, jurisdiction, United States, state, California, and zip code. Okay. And form of identification and issuing jurisdiction. Okay. So again, state driver's license. I forget what I put last time. I think I put K. Okay. Country of jurisdiction, United States. State, if you want, or state, I mean, you need to put state in. Okay. And again, oops, there we go. Okay. And you need to upload a copy of your ID. Okay. And next, then you click next. Okay. And before you submit it, and I'm not going to submit this, but before you submit it, you need to put in your email address, confirm your email address, put in your first and last name. You click that you are, that you agree. I certify I am authorized to file this BOIR on behalf of the reporting entity. I further certify on behalf of the reporting company that the information contained in this BOIR is true, correct, and complete. Okay. All right. So you'll click that. And then you will click I am human, right? So it knows you're human. And then this submit BOIR button will populate, and you will be able to submit your report. Okay. Again, I'm not going to do that because I don't want to, gum up the database, but that's all you need to do. So you can see we worked through it in what I think was about 10 minutes. It might take you a little bit longer because you have to, take a picture of your driver's license or whatever. So I'm going to go ahead and stop sharing and go back to the presentation. So this link will be in the show notes. And if you are a reporting company, so then if you choose to, you can file, you can do the reporting yourself. Okay, so next. Now, let's talk about failure to report. Okay, now, I didn't see anything about forgetting to report or not understanding how to report. Okay, so I don't know what's going to happen in those circumstances. However, willful failure to report, complete or updated beneficial owner information to FinCEN, or the willful provision of or attempt to provide false or fraudulent beneficial ownership information may result in civil or criminal penalties. I'm reading this to give it the impact, including civil penalties of up to $500 for each day. Okay, per day. That's $3,500 a week. That's $15,000 a month on average. Okay, that the violation continues. Or criminal penalties, including imprisonment for up to 2 years and or a fine of up to $10,000. Okay, and senior officers of an entity that fails to file may be held accountable for that failure. So it's not like they're going to, you can't put a corporation into prison, right? It's the officers that will get tagged for that. Okay. And I don't think, as the officer of a company, you're going to be able to say, well, my lawyer should have done it. I don't think that's going to work. Okay. And by the way, if your attitude is, I don't want the government to have this information, so I'm not going to file. I'm not a lawyer, so I'm not giving you legal advice, but to me, that sounds like willful failure to file, okay? Because you need to file and you're choosing not to, okay? And you're basing it on your, not wanting to file as opposed to your belief that you're exempt. Now, what would be the penalty for not filing if you believe you're exempt and it turns out you're not exempt? Don't know yet. Okay. Don't know yet. So these are all unanswered questions, and hang on, because it's going to be a ride, right? all these new regulatory schemes turn out that way. Okay. So Last thing, there is a small entity compliance guide, which is sort of funny because it's basically only small entities that need to comply. I put the URL here. You can screenshot it if you want, but it's also in the show notes. It's going to be in the show notes. So if you're watching this live, just give me 20, 30 minutes after the show is done, and this link will be in the show notes, and you can download it. It's a PDF, and let me see if I can. Let me try this. Okay. Nope, it's not going to let me do that. Yeah, Windows share. Yeah, it won't. For some reason. Oh, here we go. Finder. Okay, that's what. Let me see. Share my Finder. Nope. Yeah, for some reason it won't let me share my Finder. I wanted to show you a copy of what the this BOI small entity compliance guide looks like. But it's really nice because, excuse me, as you go through it, it asks you certain questions that you can answer, and I think the intent is on your own determine whether you're required to file. Now, whether you want to trust FinCEN to properly guide you to a decision about whether you need to file or not, that's up to you. My information, my advice stands. If you're not sure whether you need to file, you have any questions, talk to your lawyer, talk to your accountant before you file to make sure that you're doing the right thing. Okay. There's nothing like individual advice to make sure that you're, properly in compliance, right? So, but in terms of questions that you may have to make a meeting with your lawyer or accountant more efficient, it's certainly worth your time to read this and understand what questions there may be about your situation before you meet with your advisors. Okay. All right. I think that's what we got here. Yeah. So these links will also be in the show notes. So if you have any questions, you can email me. Okay. As you know, I'm not a lawyer. I'm not an accountant. I'm a professional fiduciary and a business advisor. And that's why I bring this up. It's really in my capacity as a business advisor to, help you avoid problems down the road. But feel free to email you. If you're asking me a question that I don't think I'm qualified to answer, so I'll let you know that, and I'll be happy to find you someone who I think is qualified to answer if you don't have an advisor that you can turn to. And if you have a general question, feel free to post it on our social media, because other people can then benefit to whatever response I give, or if it's, again, something I'm not qualified to respond to, I will see if I can get someone who is to answer that question, and then either have that person post his response or I will on the person's behalf. Okay, so, again, I want to emphasize a couple of things. Well, actually, let me just, we got the legal stuff here. Okay, there's the legal stuff. All right, so let's take this down and go back. So I want to just, in closing, I want to emphasize a couple of things. Number one, this is brand new. The reason I know about it was I was doing an annual report on an entity, and on the Secretary of State's website for, I think it was Arkansas, there was a notation that said, okay, you've given us our annual report, make sure you deal with BOIR. And I had no idea what BOIR was before I saw that. And so being advised to comply, and I think well, actually, I'm not going to say that because I don't remember now. But anyway, being advised to comply, I looked into it, found out about it, read information about the CTA, the Corporate Transparency Act, and read information like I showed you before on the BOIR, so that I would be, I could properly advise people about what they may need to do. Notice I stress may need to do, not have to do. I can't tell you whether you need to comply with this or not. I don't know what your individual entity is. I don't know whether you're, an exempt entity or or whether you're a reporting company, all of that needs to be determined. So what I do want to do is make sure that you don't get caught up. When you think about it, if you don't file your tax return, what happens? Well, if it's willful, it's bad, right? But even when it's not willful, there are penalties for not filing. And I imagine that it'll be the same thing with the BOIR, even though I couldn't find penalties specified for non-willful failure to file. One would imagine at some point there's going to be some sort of punitive action taken. So, is this rule going to survive? One would imagine so. Evidently, more, 2/3 of our legislators believe that it's important. So I don't know, is the makeup of Congress going to change, so much after the election later this year that the law would be repealed? That doesn't appear to me to be the way things generally work. Once one of these laws is enacted, it seems like it stays in place. So I think it's something, we as small business people are just going to have to deal with, and whether we like it or not. How you deal with it, of course, again, emphasizing that's a decision for you to make. So that wraps things up for today, and I thank you very much for watching. I hope you found this useful. Would love to hear your comments about it. If there's something else that I could have done to make it more useful, by all means, let me know. Feel free to post a comment, as I mentioned before. And if you have questions that you think I might be able to help you with, by all means, let me know. So that wraps it up, not only for today, but for the week. And so next week, on Monday at 10 a.m. is the next edition of Trust and Estates Weekly. My guest is going to be Michael Reynolds. Michael is an appraiser, and he's going to talk about appraisal issues related to trusts and estates. Okay, on Tuesday is the next edition of Business Lessons from the Military. And then a week from today will be the next episode of People Making Money. So once again, thanking you for joining me not only today, but all of this week. Really appreciate your viewership. Wishing you a terrific rest of the day and a wonderful rest of the week. And signing off, Marie. I've done that twice in a row now. Marie, darling, you are my Belle. All the best, folks.